Hey, what's up guys? It's Ezekiel Chiu here. Let me hit you with this. Most traders lose not because their strategy is bad, but because their charts are lying to them. So the market throws like fake signals, right? Whipsaws and false breakouts. And then you get stopped out again and again. So what if you could flip the script and make the chart finally tell you the truth? So today I'm revealing a Heiken Ashi trading strategy that works like a charm. This is where you can cut out the noises, locking you on the real trend and helping you catch the big moves with way less stress. Once you see how simple this is, you will never want to trade without it again. Let's dive in. So first off, what is the Heiken Ashi? In Japanese, it means average bar. Here's the thing, this doesn't mean much until you actually see this in action. So instead of showing price changes like a normal candlestick out there, the Heiken Ashi smooth everything else. So what this does is that it averages the price to filter all that crazy noise, all that wigs, etc. The Heiken Ashi candle close is calculated by adding the open, the high, the low, and the close of that current candle and then divided it by 4. Alright, so I'm giving you like the back foundation of how this works. You do not know exactly why or how it is meant to be calculated. It's just so that you have a good idea behind it. Alright, so now, once the candle open, is calculated as the middle point of the previous candle open and close. So then, using these two averaging techniques, it creates a clearer and a smoother view of, in a way, price action. Right, so now let's look at this chart with the Heiken Ashi candles. Alright, so here's the thing. When you're trading on most of the platforms out there, once you add in the Heiken Ashi indicator, right, the candle indicator, it will switch the chart from the normal bars that you're seeing right now, the candle bars, into this Heiken Ashi bars itself. And this is what and how it's going to work. Alright, so now once you switch to these bars, you are going to notice what? You're going to notice how price action, it appears smoother, clearer, right? And the main usage of this is to make you identify trends easier, right? It becomes easier to spot trends, right? So during an uptrend, we would mostly see the green candles, right? Of these Heiken Ashi candles. And then same thing, during a downtrend, you mostly see the red candles, right? So knowing what the Heiken Ashi is just the first step, right? The real question is how do we actually read them and then eventually use them to make good trades. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. It's actually pretty simple. So basically, when we break down the candles of the Heiken Ashi, there are just 3 types of candles. The bullish ones, right? So the bullish Heiken Ashi candle here's how it looks like. It's a green, solid body with an upper wick. So it may have a small or entirely no lower wick, right? So this indicates what? An uptrend. The main thing, bullish candle, big green body, upper wick. The one at the bottom, the wick at the bottom is either nothing at all or very small. All right. So this is what a bullish Heiken Ashi candle looks like. All right. So this indicates what? Uptrend. So next, bearish candle. So bearish candle is just the opposite, right? With a longer, lower wick, it may or may not have an upper wick. So this signals what? A downtrend. Then the third one is the doji. So the doji can be green or can be red with a small body and long wicks on both sides. So this means what? This means that the trend is now slowing down, right? The market is pausing before deciding on the next move. All right, so now you got the foundation of the 3 types of candles, right? So we are going to use this to help you to identify the 5 key signals of the Heiken Ashi charts. You ready? Number one, a strong uptrend. Right? So in a strong uptrend, you are going to see a series of the green candles, which is what we talked about earlier, right? With no lower wick, right? So this means what? It's only all the upper wicks, right? So this means strong bullish candles, right? This means what? The buyers are in control, right? So plus, if the candles keeps getting bigger, it shows the trend is gaining strength, right? This means what? Strong buying momentum. It also means that, hey, it's a good time to enter in an uptrend in the direction. I'm not telling you, oh, you see this, you enter right now. I'm telling you, which we will cover later on how to enter. I'm telling you that this indicates that the trend, the momentum is strong. So if you're looking to sell right now, don't do that, because that is now having a strong buying momentum. Now, next. So when the uptrend starts to weaken, here's the thing. The candles start to get smaller. Sometimes they even show the lower wicks. So the candles start to get smaller and the lower wicks may start to appear. Right? This means what? The buyers are now losing strength. And this also means what? That the trend may pause, the trend may retrace, or the trend may entirely reverse. So during this time, let's say you have already bought. This may be a time whereby, okay, that you can note that, hey, the trend may be changing, the trend may be reversing, or the trend may be pausing. Right? I'm not telling you to get out right now, but if you're intending to get in right now for a buy, that's not a good time. All right, you probably want to wait for the retracement first or further confirmation before it breaks up the next wave again. The third one, sideways trend. After an uptrend, whether it's the uptrend or the downtrend, you might see a series of doji candles, right? Which is what we talk about, right? A doji candle. So a single doji, one doji can mean what? Momentum loss. But when you see multiple doji candles, it means what? The price is moving sideways with no clear direction. So you want to wait, right? You want to wait it out. It's just undecided at that moment in time. Preparing for either direction, actually. Now the fourth one, a strong downtrend. A strong downtrend is just the opposite of a strong uptrend. So this is easy to spot because you have a series of red candles, no upper wicks, only lower wicks. Candle bodies get bigger, strong downtrend. This is where you want to, it's time, if it fits your strategy, you want to get in on a selling trade and not a buying trade, because the selling momentum now is strong. All right, and then the fifth one, the wick downtrend. Right, the wick downtrend is where the candles start to get what? Smaller, and it may even show upper wicks, because usually the bearish candle should be lower wicks, right? But now it starts to show upper wicks itself. This shows what? The sellers are losing momentum. It means what? The trend may pause or even reverse. So if you're thinking to sell right now, now is not a good time to sell, because you're not selling with momentum. Right, so now you're getting the hang of it, right? Now you're getting the flow. I'm going to start to put all of them together. But here's the thing, most traders, they don't realize that they don't use the Heiken Ashi in a way, the right way. There are actually two types of Heiken Ashi candles, the classic and the smooth. Right, so most traders, they only use the classic version, but we don't. All right, so now let's take a look at the classic Heiken Ashi. So this is a candlestick technique, right, that smooths out the price movement, right, which is what we talked about earlier, right, for a clearer view of the trend. Now, if you take a look at this example, right, on a traditional candlestick chart, you will notice a lot of market noise during an upwards movement. So this noise can create confusion. It can create false signals for the buyer, like, oh, maybe it's not going up anymore, maybe it's going to go down, that kind of thing. But if you switch to the Heiken Ashi chart, you see that it smooths out the market noise by displaying consecutive, the same colored candles when the market is trending. So this allows traders to easily identify and follow the overall trend with better clarity. But like any other technical indicator, the Heiken Ashi has its drawbacks. One of the biggest limitations, which is why you don't see a lot of people using Heiken Ashi, is that it doesn't show the actual market price as well as the traditional candlestick chart itself. It shows the smooth version, right? But that would, in a way, restrict our ability to have a proper read on the chart itself. It makes us harder to spot chart patterns, for example, or to find key support and resistance level, right? Because the Heiken Ashi doesn't actually show you the actual market price itself. So that itself would make us not want to switch to the Heiken Ashi chart, and which is why the normal candlestick chart is actually more popular instead. Right now, to address this issue, a new indicator was created. It's called the smooth Heiken Ashi. Right, so the smooth Heiken Ashi, it now overlays the actual chart, the candlestick chart, instead of replacing it. So it is an add-on. We are still having the normal candlestick chart, but it now adds the Heiken Ashi. Right, this allows us to see both the actual price and the smooth trend itself. Now, this is going to be useful, isn't it? Because you now can look at the trend while still seeing the real candlestick chart itself. Alright, so meaning to say that we are still going to trade the same way, but now the Heiken Ashi is now an added indicator. Alright, so this helps us what? This helps us to spot trends more clearly. So while keeping all the important price details visible, like what we talk about. So for example, if you take a look at this, it enhances our trend visibility, right? Plus, it does a good job into filtering out all the noises, right? Especially in volatile markets like this, whereby you're going to see all these dips, potential dips, right? Dips below, etc. Right? All these dips below may allow people to think, oh, the trend may change, so on and so forth. But Heiken Ashi can overall tell you that, hey,
we are still in an uptrend. Don't get faked out by all these whipsaws, all these false breakouts.
It's helpful, right? It's helpful. As you can see, the smooth Heiken Ashi, it remains largely unaffected by all these short-term market fluctuations, right? So this gives you a reliable buying trend signal. The green candle shows what? The green candle shows that the price is moving in an uptrend, right? Now, the red candle signals a downtrend. So we already covered all this. So now, by using this, we can use the colored candles to spot potential trend reversals. So for example, let's take a look at this. If the indicator changes from green to red, so it signals a possible shift from an uptrend to a downtrend or vice versa. So then we add on, right, our knowledge of the size of the candles. Remember the bullish candles? The size of candles will help you to identify how strong the trend is, right? If the candles gets bigger, it means the trend is getting stronger with more momentum. If the candles get smaller, it means the trend is losing strength, correct? These candles will help us to also spot potential trend reversal. So for example, if you look at this, we identified the trend reversal from a downtrend to uptrend by at a point when the Heiken Ashi shift from the red to the green candle. Now, before the color change, the red candles were actually getting smaller. So this shows that the downtrend is weakening, right before the uptrend started. Okay, now here's how to put it together. As we know, as you now know, right, this shift of red to green candles, right, is based on the trend direction. Now, you got to understand this is not a direct buy or sell signal the moment it changes color. Meaning to say that you cannot just enter a buy trade just because the candle go from red to green, right? You shouldn't go for a sell trade just because the candle go and change color and change to red from green to red. So no. This is not how you are supposed to do this. Because why? When you do it like this, it will lead to a lot of late entries, right? Late entries, and you're going to miss out a lot of opportunities, right? If you take a look at this example, if you look at this chart, we see what? The market is in a strong downtrend. And also by these larger red Heiken Ashi candles, right? So this confirms what? Okay, strong bearish momentum. Then you notice that Heiken Ashi starts to get smaller, right? It signals what? A potential slowdown, only slowdown in the downtrend. Now, it finally turns green. This is the point where it suggests what? A potential reversal from a downtrend to an uptrend. But if you take a look at this, the color change only occurs after price has already made a pretty big move upwards. So if you enter a buy position at that point, it's kind of too late. We have missed the whole chunk over there. So now I'm going to show you the 4-step strategy on how can you use the smooth Heiken Ashi indicator. Step 1, you got to find a strong, clear trend. So for example, right here, right, you can see that the price is moving down. The indicator is showing large red candles. This tells us that it's a strong downtrend. All right, so now, once we have identified the trend, the next step is to look for that change in trend. So then, we do this by waiting for the Heiken Ashi candles to start showing us signs that the trend is about to reverse. So we see that the candles start to get smaller, right? And then finally switch to green. So this signals that our trend has changed. So this is step 2. But we don't want to buy here just yet, right? Because like what we talked about, a late entry is already a late entry because price has already went up, right? It's already went up. So then what do? Instead, we wait for price to pull back towards the Heiken Ashi indicator itself. And that is step 3. So this means what? We are actually using the indicator as support and resistance level. So then for step 4, we wait for, once it comes down to our indicator, right? We wait for a confirmation signal, right? We do this because we want to be really sure that the trend will continue to move upwards and not like suddenly just reverse and go back down itself. So what are we looking for? We are looking for price to show us that, okay, it's now ready to move upwards in this specific area. All right, so now, if you take a look at this, what do we see? There is a what? There is a red candle with a long wick pointing downwards. Okay, so this is important. Why? It shows us that even price tried to go like downwards, right, to the lower, the buyers step right in and then push the price back upwards. So this is a signal that there is a clear rejection from the downside, meaning to say that the sellers cannot hold their ground over there. And then right after this rejection candle, we see a green engulfing candle that form. So this is a strong sign as an extra confirmation of this upwards momentum. So one red candle, it's good, but it's not good enough. One pin bar is good, but not good enough. Plus this green engulfing candle, it gives us a strong sign of an upward momentum. Gives us extra confirmation that the price is now likely to continue to move and push its way upwards. All right, so now that you got our strong confirmation signal, that's where we can enter for what? For a buy position over here. All right, then for your stop loss, we're just going to place it below that swing low, right? Just place it slightly below, right? At the bottom of the candle wick, right? And for our take profit, we want to aim for the next rejection level. I would prefer it to be on the same time frame itself. All right, cool. So now with this method, we are able to execute what? These are pullback trades of trend reversals with high probability. I'm not saying that we cannot trade even more. We can. Right now, you got to look at other time frame, inter time frame to decide whether you want to go more. But this method allows you to learn when the trend has changed with confirmation and precise entry points. Good? All right, now let's sum it up. To master the Heiken Ashi, we covered the 3 points, right? We use the Heiken Ashi to smooth out the market noise, right? So that's where we make the trend clearer and easier to follow. The 3 main types of candles, which is what we talk about. The green candles, the bullish one, shows an uptrend. And then we got the red candles that shows the downtrend, right? And the doji indicates indecision, right? And potential trend changes, right? We also covered the 5 signals, right, of the different type of trend, the strong uptrend and the strong downtrend and the weak downtrend and weak uptrend and the sideways trend, correct? And then we talk about the classic and the smooth Heiken Ashi. And then we say that the smooth Heiken Ashi is actually more reliable, right? Because we can still use our normal candlestick chart itself, right? Then we also talk about we do not want to solely rely on color change. A lot of traders do that. Oh, the color has changed. It's now in the uptrend. I need to get in right now. No. It's going to always be late entry. And that's where we use our 4-step method to enter with pullback and confirmation itself. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you. right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.